Hello everyone! As we do every month, we are going to share with the main insights that can be extracted from our digital top-down methodology. Our method consists of evaluating the attractiveness of European equities with regard to 4 complementary pillars of analysis. The first pillar focuses on economic growth momentum in Europe. This is accelerating in March to a third-year high. The economic recovery would be strong, with the consensus of economists expecting a plus 4.2% GDP growth in 2021 and 2022. This is obviously a supportive environment for equities in the medium term, even if the recent rise has been rapid. The second pillar is the ECB's monetary policy. The ECB is very accommodative in the recent upturn in inflation, is driving down real rates and facilitating the diffusion of a monetary policy that will be maintained for many months. And this has consequences for the third pillar of our analysis, which is valuation. In a context where interest rates are very low or even negative, the notion of valuation becomes crucial. The risk premium of the European equity market remains attractive because it is higher than the average observed over the last 20 years. A reversion for this historical average could lead to a 10% to 15% revaluation of the European equity market. In addition, earnings growth for European companies in 2021 should be around 40%, and the earnings revision momentum by the analysis consensus has been moving upwards since the beginning of last autumn. Finally, the fourth pillar deals with the behavioral aspect. The momentum is bullish as an international equity indices are above their 200 days moving average. However, it will not be surprising if the European indices, which have just reached their pre-crisis heights, were to take a healthy breather before targeting the next key technical levels, approximately 15% higher. In conclusion, the environment is generally favorable for European equities. They remain strategically essential in an asset allocation. The economic momentum is accelerating, the central bank is flooding the financial system with liquidity, low interest rates justify a deep revaluation, and markets dynamic remain bullish even if the short term of a major resistance may trigger a healthy consolidation. Well, that's all for today. See you next month for new insights by Chain Capital.